and welcome to Tax Matters. I am Chiamaka Ohauchi. Let's play games. Let's find out how much of happenings in the taxation subsector you're following. Let's begin this way. What is trending in the area of value-added tax? The proposal to increase the rate of VAT from 5% to 7.5%. Yes, you got it. What is TIN? Are you one of those who mix up PIN and TIN? PIN is personal identification number that you use for your ATM cards and other payment options. But TIN, on the other hand, is taxpayer identification number. Do you have a TIN? Are you aware that TIN registration has now gone live? That is to say, you can register from home, office, from anywhere in the world, 24/7. And it's as easy as ABC. Just go to the JTB app on your Google Play Store on your Android device and provide simple information. And voila, you have your TIN number. And are you aware that there is a proposal for a police trust fund? On this episode, we are going to look at these issues and more from the prism of the CITN. That is to say, our story is going to revolve around a seminar organized by the CITN on current issues in Nigeria taxation. In the third week of October 2019, the CITN organized a seminar on current issues in Nigeria taxation. VAT Act, stamp duties, the new JTB PIN registration system, and the proposed police trust fund. The seminar was organized at 2 locations. First in Abuja on Tuesday the 15th of October and in Lagos on Friday the 18th of October.
It is my pleasure to welcome all the stakeholders to the Institute seminar, where current issues in Nigerian taxation will be discussed, aimed at harnessing the view of members towards government policy. It is our hope that this interactive seminar would be of much benefit not only to the CITN members, but also to the revenue agencies of government, taxpayers, and relevant stakeholders in the tax system.
Speaking in the same vein, Dame Olajumoke Simplis, president of the CITN, gave the reason for the seminar.
We strongly believe that a platform such as this is a potent force capable of swaying government direction and thoughts as we bring to the fore in a professional and practical manner the implications of government proposed policy actions and suggest better ways towards achieving the intents and purposes of government actions.
First on the list of presentations was a look at stamp duties administration in Nigeria.
I had an experience recently. I walked into a filling station. I wanted to buy fuel. And the attendant told my driver, "Oga, you will pay 50 naira. And he said, "Which 50 naira? Why will we pay?" And the guy said, "If you are not going to pay, drive out." The implication is that there's something happening recently. And that is for every POS transaction you do. What do? You pay 50 naira. And what do we call that 50 naira? Stamp duty. So I'll quickly just take us through some amendments, very few amendments, but it has impact, and would go into the discussion. The Stamp Duty Act is very old, is an area where most people don't look at, and a lot of things are coming up. Why will I have to stamp a document? If I don't stamp the document, it's not admissible in court. And that's where everybody have to go ahead to stamp. So that when I present this document, it doesn't become just ordinary paper and then it's thrown down the trash. So that's why we have to talk about stamp duty. Now, what are the changes that we saw? One of the changes is that you now have stamp duty on electronic record. The question is, how are we going to apply the stamp duty on electoral record? And one of it that I've seen is that I have to pay 50 naira for using POS. The transaction on the POS is not seen physically. You only give me an acknowledgement that I pay. So that small paper that you get is the receipt that we are stamping for 50 naira. So that's what it means. Providing stamp duty relief on instruments that attract additional conveyance duty when you transfer from limited partnership companies. So it's an amendment to reflect that. The critical aim for the amendment of the Stamp Duty Act is because it is old and archaic, and other acts have gone through a series of amendments, and to also make sure that some provisions are in the Act that compares with best practice. The issue that we have with stamp duty is that most people would go into contracts, agreements, and those contracts and agreements are not stamped. And because there is no enforcement, you find a lot of times that you go into a legal battle, and the question is, where is the agreement? And by the time you bring out the agreement, it's just mere paper. And the lawyers will tell you, sorry, this is not admissible in court. So the loss is to the people that go to court. So if you don't have to go to court, you don't see any reason why I should stamp my document. And that is what happens. But with this amendment to the Act, it means that people will now need to look at it.
Mrs. Fowokon's presentation was discussed by Aishata Aboluwaje.
As she mentioned, it's something that has come up. It's been in place for like 80 years. So it's on all kinds of instruments, letters, posts, and all of that. And I don't know if some of us are aware that there's been like an ongoing battle between the NIPOST, which is the postal agency, and FRS on who is to administer, who is to collect this 50 naira charge, because it's so little, but it's yet so big. So one of the bases of an amendment is to situate who should control what. But we have plethora of legislation, varying laws that suggest that FRS has overarching powers over stamp duties. We have the FRS Establishment Act. We have the stamp duties itself that says who should handle what. And that gives FRS some leverage over NIPOST. But be that as it may, NIPOST has traditionally been in charge of stamps and a whole lot of this, and that has devolved to them. So now there's been a modality to find a way to settle NIPOST so that they can collect their 50 naira stamps as we used to know it, and then FRS can then handle the bigger transactions as we know it.
Another discussant was Mr. Emmanuel Aregan, who presented the JTB perspective.
The lead presenter has done justice to the amendments that were made to the Stamp Duties Act, and I must say that one of the unique features of that amendment is the coverage of the electronic aspects of stamping. You know, this is very key because under the prevailing contemporary international order, economic, political, issues of technology and ICT, we can't do away with it. And although I see a challenge there because effectively taxing electronic transfers is still a bit tricky, because globally there has been challenges in adequately coming up with effective means of taxing electronic commerce. But we are glad that at all levels, at the international level, at the regional, at the local level, efforts are being made to see how effectively the huge volumes of financial transactions that pass through electronic channels are adequately taxed. That is one good thing.
Past president of the CITN, long-serving executive chairman of the FRS, and one-time accountant general of the Federation, Dr. J.K. Nayeju, was the moderator.
I think the issue of stamp duty is that we fail to grow the act with the reality of the economy. what, what is happening now in the global and national phenomena requires that we revisit the act and put what we mean now, not what we meant then. NIPOS issue and FRS, I have a simple solution. The solution is that anytime we have differences and we cannot iron it out, and they are all government agencies, the next point of call is the court.
Aishata Bolurade had the double honor of discussing the proposed police trust fund and effect of VAT increase in the country.
There have been impending changes to VAT rates. I think it started in 2007 when Okonjo-Iweala was the Minister for Finance. She said she wanted to increase it to 10%. There's a provision in the VAT Act that says the minister may increase rates, and she just wanted to leverage that. Of course, everybody kicked, so in no way it wouldn't happen, and it just died down. It went. It started again last year when they were doing the MTEF and the run towards appropriation bill. There was a question of, okay, adding luxury tax, increasing value-added tax, and there was a sensitization of the public. Of course, people kicked back. It started again around April of this year. But this time, it has been included in the finance bill that has been presented to the National Assembly for passage. The increment has been put into place when we are considering the revenue that the government is going to generate to implement 2020 budget. So it's more or less like very real. Why again should we be talking about VAT increase? We have fund, we've said it, we can't overemphasize it. That we have serious funding challenges from revenue generation to deficit to the amount that we pay on funding debts. It's huge. So we can't overemphasize that we have serious funding issues in Nigeria, and it has to come from somewhere. Oil and gas, we don't really control the pricing. A lot of factors control. What we control is what we can talk about as a people, as a nation. So we talk about tax increase, which is the next in line. VAT is relatively easy to administer. So I don't need to know what you have made as a company. You don't need to pass any major accounting entries for me to say, so long as there's buying and selling and the transactions are vatable, there's VAT. We have only about 20 million people in the tax net in Nigeria. We are over 200 million people. We have a lot of people buying private jets, buying first ever Bentley ever, a whole lot of things all over. But we have only 20 million people in our tax net. And of these 20 million, we can count on the number of our fingers the people that pay above 20 million naira in taxes. So that's a major issue. But as bad as that is, even if we say, okay, we ramp it up with the JTB's involvement, I'm sure they want to ramp up the number of people in the tax net. Even if you say, okay, we make it 40 million, it will still not equate to the number of transactions carried out daily. So, which is why VAT is also an easy pick. I don't have to be in the tax net to pay VAT. It's just a very few people that will be in the tax net. Okay, charge, collect. But we are very important dependent. We are trying to curb that. But every good that is not exempt brought into Nigeria suffers VAT. Nigeria's tax to GDP is very low. We are about 6.1%, one of the lowest in the band. And according to the World Bank, if you want to, I'll just show you this. If you want to make any meaningful development as a nation, your tax to GDP should be at least very minimum 15%. That is when you are talking. We are 6%, so we are a far cry from where we need to be. So it's a question of we need to do something. I know we will get to the issue of what are they doing with the money. This is a chicken and egg situation, because who blinks first? Which one comes first? Is it the chicken or the egg? Do we pay first and then tell them to use, or we don't pay? If you don't pay, we are going to be where we are or sinking. So it's a question of how do we administer, how do we address these issues? 50% increase, 7.5%. How does it impact you and I? Of course it would. By the time, because it's an end user tax, anybody that charges it has to pass it on us, and you and I are the end users. So would there be inflation? Oh yes, there would be. Would there be reduction in purchasing power of the few naira and kobo that we have? Oh yes, there would be, because the cost would go up. But guess what? We are all here when oil prices was at least 4 pump in Nigeria. It was 70 kobo, it was 33, it was 20, it was 3 naira, it was now 60 naira, 92 naira, now 145. So it's going to happen, yes. Did we, as a nation, yes, the inflation happened, but we all still survived. So it's one of the considerations why we need to look at it. Even if with the 7.5% increase, we are still not going to get to where we want to be, but at least it takes us a bit higher. It's a painful decision, but as I said, who blinks first, chicken or egg? If we don't, it's a gamble. It's a risk that we need to take by paying first and then putting our mouth where our money is to ensure that they use it judiciously.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Welcome once again. Let's go to school. Yes, let's go to the classroom. How much do you know about the Nigerian tax system? That question is what we intend to answer on this segment of the episode. And Mr. Babatunde Fowler, quintessential taxman, is our teacher. The occasion was the Nigeria-Canada Investment Summit 2019, which held in Abuja, Federal Capital Territory, on Tuesday the 5th of November 2019. It was the second annual edition of the summit. Mr. Fowler was on hand at the summit to take the prospective investors through the tax regime in Nigeria. His topic was on tax reliefs. But as you'll find out presently, he did much more than that.
Canadians are very tax compliant, so I don't think they'll find it too difficult to take in what I have to tell them today. But let me first of all introduce Nigeria to you in the area of taxation. Nigeria operates a federal system of government with 3 tiers of government: the federal, states, and the local government, and they each have taxing authorities in line with the Constitution. But one thing that investors want to know is certainty. They come into a country, don't know the tax obligations, apart from the potential profits that they may make. Now, the FIRS, which is the Federal Inland Revenue Service, is I'll call it the umbrella body when it comes to taxation. We collect federal taxes, but we also have each state having an internal revenue service, which collects state taxes. And together we have what we call the Joint Tax Board. And that's to ensure uniformity and, of course, hopefully more convenience when it comes to paying taxes. So as the chairman of the FIRS, I'm also the chairman of the Joint Tax Board, so that I'll be speaking on behalf of both the federal and the state governments. I'll talk about a few of the major taxes that we have before I go into the incentives. We first of all have what we call the petroleum profit tax, for those who are interested in that sector. We also have what we call the company income tax, the value added tax, and education tax. We have what we call the National Information Technology Development Levy, capital gain tax, and stamp duties.
Now to the crux of his presentation, tax reliefs.
In looking at what Nigeria has to offer to promote business growth and also to sometimes, to some degree, encourage foreign investments. We do have a lot of reliefs. One has to do with the pioneer status incentives. We also exempt bonds and short-term government securities. Exempted also is interest on loans, and of course, deductions for research and development. I'll also go under the tax reliefs under the Company Income Tax Act. You and I have spoken about the Rural Investment Allowance. Basically, it says that if your company is located at least 20 kilometers away where basic facilities are supposed to be provided by government, that is infrastructure, water, electricity. If you decide to situate your factory or your place of business 20 kilometers away from such things, you do get rural investment allowances. You also do have investment tax reliefs, and basically the criteria for this is also that your business must be located at least 20 kilometers away where basic facilities, which should be provided by government, are not available. In terms of the accelerated capital allowances after the tax-free period for companies in what we call the gas utilization downstream operations, you have an annual allowance of 90% with 10% retention for investment in plant and machinery. In addition, we have allowances of 15% as long as it shall not reduce the value of the asset. For companies in gas utilization downstream operations, an additional investment allowance of 35%, which shall not reduce the value of the asset, is allowed as an alternative to initial tax-free period granted under Section 39B of CITA. In terms of tax holidays, Section 36 of CITA provides that a new company going into the mining or solid minerals shall be exempt from tax for the first 3 years of its operations. I'm sure there are very few countries that will give such incentives. In terms of capital allowances, we have accelerated capital allowances on the second schedule to CITA, which provides for accelerated capital allowances at 95% of qualified capital expenditure on mining in the first year of the use of the asset. In terms of the international tax relief, the avoidance of double taxation agreements, currently we have completed negotiation of 3 in the last 3 years, while we have about 9 which are ongoing, and hopefully in the next, I'll say 6 to 18 months, those 9 should be completed. In terms of transfer pricing regulation, Nigeria is a member of the Commonwealth, and as part of its independent policy to foster the relationship among other Commonwealth nations, Nigeria provides in Section 44 of CITA a tax relief for profits earned in Commonwealth countries which are also liable to tax in Nigeria.
Mr. Fowler concluded this way.
Now, as a tax administrator, I sometimes wonder, how am I going to collect revenue with all these reliefs? But our belief here is that as we promote a conducive environment for business, and we get more foreign direct investments and even local investors to go into business, eventually that tax revenue that we're looking for will come.
That same afternoon, Tuesday, November 5th, 2019, the executive chairman, FIRS, was part of a panel that discussed taxation at the African Economic Congress, which also held in Abuja. But time is not our friend, so this story will have to continue in a subsequent episode of Tax Matters. So make it a date with us next week. Same station, same day of the week, same time of the day. Thank you for watching.